Hello, I'm Midan from the United States Stock Exchange University, starting today's United States stock news on March 25th. Today we welcome you to Midan, who is maintaining the norm of United States stock investment without any major changes. Before I start recording the broadcast, I shared a video that I appeared on another channel through the YouTube posting function with you all. I appeared on a very large YouTube channel called Hawaii Selection, and the broadcast was opened again today. Part 1 of the video was already shared with you all on March 14th. After watching the first part of the video, many of you gave very positive feedback, but in my opinion, the second part of the video is a bit more interesting. So, for those of you who are interested, it would be great if you could also watch the video featuring the Hawaii presidential election. If we organize the daily United States stock market situation and follow the news like this, after all, it's a bit easier to read about the basics of stock investment. So, when the market is as volatile as it is these days, sometimes I read books related to stocks or go back to basics. After all, I need an opportunity to sort out what the investment philosophy I have is and what the overall investment strategy is again. In my opinion, watching this video could be a valuable opportunity for you all to review your own investment strategies once again. Well, then let's start with today's United States stock news prepared for March 25th. I will start by summarizing today's United States stock market situation. First, let's look at the S&P 500 index. First of all, the red color is completely dominating the green color. The number of stocks that have risen is significantly more than the number of stocks that have fallen. And another very important point is the red color is extremely vivid overall. Therefore, the decline in the value of the less expensive stocks was not that significant. This is how we can see it. On the other hand, the color black is mostly extremely clear. Therefore, not only did the market generally widen yesterday, but we were able to confirm that the rise in the value of the rising stocks was extremely large by looking at the S&P 500 map. Today, I want to share another piece of good news. The chart you're looking at now is the S&P 500. Now, if you look here, the volume we often talk about exploded yesterday. It's formed at a very high volume. So, not only did many stocks rise yesterday, but the bullish trend is strengthening as a large volume of trades are gathered at once. You can get this feeling. Well, such a rapid increase in trading volume can be a very positive sign, because if we look back at the points where the trading volume has surged over the past year, we can see why. If you look here, the red resistance line is formed very high. This means that although there was a lot of trading volume, the selling volume was much more. After that, the stock price fell, and if you look here, the black line is now formed high, and after that the stock price keeps rising. It broke once here, and then the stock price continued to rise. There is a very high orange resistance line here, and after that the stock price trend was not very good. If the trading volume is halved in this way and the stock price moves dramatically, such a trend can continue for a long time. This was a trading volume that could raise expectations positively. I think it would be good if you could refer to it. Yesterday, many items rose in tandem and the market also rose sharply in a large range. Well, the percentage of stocks that rose above the 51 cent percentile of the S&P 500, which closed at 33 yesterday, is now almost 39%. We were able to directly confirm that the market is expanding very rapidly as the percentage of stocks with good long-term trends rises to 45, fifth place. Yesterday, we saw a very good pattern in what we call the big spread, and if you look here, it's almost meeting the line below. The spread index fell to 17.5%. That sums it up. If it falls a little more, there is a high possibility that a point of intersection with the simple moving average 200-day moving average will occur. I've mentioned several times that if the spread index falls below the 200-day moving average, it's a very negative signal for stocks, and if it forms above the 200-day moving average, it's not a good signal. I've delivered this message. Let's take a look at what actually happened in the past. Let's move once with a 3-year chart. What was the VIX index over the past 3 years? The stock price's volatility rose significantly as it approached the 201 average line. The current period in 2023 is starting off differently compared to the 2022 bear market, where the distribution index remained significantly above the 201 average line. And finally, in 2023, as the fear index became significantly lower than the 200-day moving average, the stock price in 2023 and into 2024 skyrocketed at an incredibly high rate. And recently, as the fear index has again formed above the 200-day moving average, the stock price has either exploded or, as recently the stock price has been adjusted, this cycle has ended. You can see it this way. Well, so recently, there are signs that the fear index is falling below the 200-day moving average again. This part can be said to be a very negative signal. Next is the fear and greed index, which is also extremely negative. Now, as it goes up to 28, it's completely shaking off the extreme fear. And if you look at the timeline, as you can see here, the fear and greed index recorded 14 with a huge drop. And with this extreme fear, we can confirm that the market atmosphere is improving a lot, as it shows a little bit of progress while this extreme fear is gradually disappearing. Next is the average topic score. Yesterday, excluding only 2 types, the remaining 16 types all rose. Moreover, as shown here, there are as many as 4 types that have risen more than 10%. If you look at the top, Tesla soared 11.93% yesterday, leading the market rise. The reason why Tesla's stock price was so good was because, as I mentioned briefly in yesterday's broadcast, Elon Musk held the first ever all-staff meeting online, and through this meeting, he conveyed a lot of talk about Tesla's future. During this time, Elon Musk, the chief executive officer of Tesla, he usually communicated with his employees via email. Through email, the current situation of Tesla is like this, and I'm grateful to all of you for working hard. He would discuss various topics and he would communicate many times about the issues at hand. Yes, it was the first time he delivered a message through a video like this to all employees, as you can see. Yes, while talking about Tesla's future, he sent a message that you shouldn't sell stocks now, our stock price will rise soon, and this was the decisive factor. Yes, and there's one more thing. Yesterday, news came out that the Federal Bureau of Investigation has formed a special task force to investigate allegations against Tesla. Recently, there have been numerous threats related to Tesla, and now the Federal Bureau of Investigation in the United States has stepped in, showing that the United States government is taking a proactive stance in supporting Tesla. It is understood that this news has been helpful. In any case, Tesla has dominated the market like this, and that's how you should see it. Secondly, the Street G rose by 10.43%, exploding. Thirdly, B2 rose by plus 10.39%, Innovator by plus 10.28%, and Credit Technology also rose by 9.04%. Palantir rose by plus 6.37%, Celestica by plus 4.20%, Meta by plus 3.79%, Amazon by plus 3.59%, Vistra by plus 3.34%, Nvidia by plus 3.15%, Taiwan Semiconductor Manufacturing Company by plus 2.51%, Alphabet by plus 2.25%, Nextracker by plus 2.10%, Talon Energy by plus 1.93%, and Uber by plus 0%. It rose by 0.88%. Well, 2 categories fell, but Broadcom was the only stock that fell uniquely. Recently, 2 types of bad news have collided, causing a continuous downward trend. Bitcoin also fell slightly to 87,070, as you can see. This time, the adjustment of the United States stock market, no matter what anyone says, is definitely caused by President Trump, and the reason why the United States stock market is rising again yesterday is also thanks to President Trump. You can see it this way. Let's hear what the story is about. The tariffs of President Trump of the United States are now being specified to target certain areas and are being materialized in a form that applies only to countries with a certain trade relationship. The term specification is extremely important because one of the opposites of specification is uncertainty, and a lot of uncertainty is now disappearing. This is how it can be interpreted. He is also showing continuity in the implementation of tariffs. Continuity is also a very important keyword. Why? Because if you look at it, President Trump, who seemed as rigid as a stubborn old man, is now slowly showing a flexible movement, easing the minds of investors. You can see it this way. Last Friday, he mentioned the possibility of suspending the implementation of tariffs. applying exceptions to certain products according to the trade agreement or delaying the overall implementation of tariffs. And the stock market soared on Monday, fueled by President Trump's remarks. President Trump hinted that countries could be exempted from the tariffs, which is why the market reacted this way. However, President Trump's tariff policy is rapidly changing. When considering the unpredictable actions that are unfolding, it's uncertain whether this bullish trend will continue. That's how you should see it. Don't worry, that's what I'm saying. Traders often try to predict the future by looking at technical trends of stock movements, such as the 200-day moving average. However, in political times like now, a cautious approach to Trump's policies may be more appropriate. That's what I'm saying. I'll show you a bit later, but the 200-day moving average is also sending out a very important signal. A single statement from President Trump can make the market skyrocket and plummet, so now technical analysis can't play its usual role. That's what I'm saying now. The reason we do technical analysis is that there is one premise condition. What is that? It's the trend. The trend doesn't change easily. Once a trend is established, there is a high possibility that it will continue in the same direction. When we throw a ball, it keeps going up when it goes up, and after hitting a certain point, this ball falls down again. It continues to fall in a certain direction. That's what I'm talking about. Well, the important thing is, this direction can be broken. We usually call it a catalyst. If you suddenly hit the rising ball, it can fall. Well, in this way, if any catalyst occurs, the direction changes, it can break the momentum. Recently, thanks to President Trump, many catalysts are happening here and there. It can be understood in this way. Well, then we should keep reading what news there is. Well, if you look here, a new Trump policy has been announced. President Trump revealed in a private meeting on Monday morning that tariffs will be imposed on automobiles, pharmaceuticals, and other industries. He further stated in a White House event later that day that the timber and semiconductor industries will be added. Well, despite this, I'm curious why the stock price is rising. Despite President Trump's statement at a Monday tariff event about imposing tariffs on certain industries, he can reduce the brakes on many countries for the top tariffs that will take effect from April 2nd. The brake refers to a reduction. Many countries will receive exemptions, as I've now explained. And again, questions came in about whether the industry-specific partial tariffs also start on the same day. At first I said yes, everything starts together, but then I showed a hesitation saying that not all tariffs are included on that day. On Monday, the United States stock market surged due to the perception that President Trump's tariffs would be less severe than expected. You can see it this way. The S&P 500 rose 1.76%, the Dow Jones was up 1.42%, and the Nasdaq Composite Index soared 2.27%, creating a bullish trend in a single day. Let me show you the S&P 500 stock chart for a moment. The 20-day moving average that shows the short-term trend of the S&P 500 is rapidly rising, meeting the 60-day moving average in a straight line. Now, if you look here, there's a green line and a black line. The green line is rapidly falling and suddenly it's rising sharply. Now, as you can see this upward trend, the green line here is the 61 moving average, that is the middle line, and it's just before the short line crosses the middle line. Therefore, if the market continues to rise on Wednesday, we can expect a golden cross to occur and we can wait for this positive signal. Now, and this time it's a moving average line. If you look at the moving average line of the SPY, an exchange-traded fund that tracks the S&P 500, the current price of SPY is 574.08. What does that mean? It means that as of yesterday, it has finally turned the 200-day moving average upward. Now, if the stock price rises like this with the 200-day moving average, and such a trend can be maintained, we can see a positive signal that a long-term recovery is possible. The next article prepared is a forecast about the United States market. Recently, as the recovery trend of the United States market continues, many investment institutions are expressing the opinion that the rebound of the United States market has begun. In the case of yesterday, representative institutions such as Goldman Sachs and Morgan Stanley expressed the opinion that the rebound of the United States market has begun. Well, today, among them, let's focus on the story of Morgan Stanley. Let's hear what they have to say and their reasoning. The stock market sentiment is turning pessimistic. The S&P 500 ended its 4-week losing streak last week and continued its upward trend on Monday. Yes, it has a very important meaning. The S&P 500, which had been falling for 4 weeks in a row, finally ended its downward trend last week and then continued its upward trend on Monday, as you can see. Michael Wilson, Morgan Stanley's chief United States equity strategist, is coming out. Michael Wilson is someone who tends to be quite pessimistic. Just to explain for those of you who might not know, his personality is quite pessimistic if you look at it that way. So, if Michael Wilson were to say something positive, it would be extremely rare, and such a pessimistic view is worth considering. That's how you should think about it. Well, there are various reasons for this kind of investor's mentality to improve, as I'm saying. First of all, last week, the relative strength index, what we call relative strength index, took a sharp drop. Also, Morgan Stanley has its own market sentiment index, and this index has reached its lowest point. To sum up, the market was in a state of overselling as it fell sharply, and in a way, it was already in a state where a technical rebound was possible. That's what I'm talking about now. Investors' positions are becoming increasingly passive, which is in turn a bearish investment and overall sell signal. Regarding this part, I have touched on it several times in my United States, China broadcasts, and shared it with you all. For example, if we follow the results of the American Association of Individual Investors survey announced every Thursday, the United States stock market will be bullish even 6 months from now. The proportion of investors who hold such pessimistic expectations and that the stock price will be down 6 months later. If you compare the ratio of investors who hold negative expectations, the negative opinion was more than 40% higher than the positive opinion. And historically, when there is such a difference of over 40%, usually after 3 months, after 6 months, after 12 months, there is a tendency for the United States stock market to show a very good upward trend. So, when sentiment is at its worst, we should seize it as a buying opportunity. This is the strategy that is established. Well, and another thing from now on, the trend will become more and more supportive. Mike Wilson also reveals that the end of the month and quarter investment rush will boost stocks. He is openly thinking this way. Well, and furthermore, usually when a new president takes office, the first 2-3 months are not very good, and then from April, we usually see a rebound. In this light, numerous factors remain highly uncertain. In addition, the recent dollar and interest rate cuts and the United States international profit rate cuts are providing additional support. According to Mike Wilson, such a trend showed a pessimistic outlook at last week's Federal Reserve meeting, but the tide has turned. In the end, there are various positive signals due to the extremely dovish stance shown at the Federal Open Market Committee meeting last week, and it would be good to see it this way. All these factors combined, and the S&P 500 indexes, Musk predicted that the United States stock market could recover after falling to a range of 5,500 to 6,100 during the first half of this year. So, Mike Musk originally predicted that the United States stock market would fluctuate between 5,500 and 6,100 in the first half of this year, and it actually fell to 5,500 and is now rebounding. There is a possibility that it could rise to 6,100 again. This can be interpreted optimistically. Well, Musk says, a rally worth trading has begun, and it's not a rebound rally, but it could continue to rise this time. That's how the market is doing. He mentioned that demand is rising again for some popular models. He said that, as expected, low-quality beta stocks have led the rebound so far, and what this means is that compared to blue-chip stocks with large market capitalization, beta stocks with slightly lower quality and higher volatility are leading the rebound. And when considering medium-term prospects, he still recommends high-quality stocks in the core portfolio, but suggests that it would be good to hold blue-chip stocks. Despite this, in the short term, such a trend may continue, so in the short term, there is a need to invest a little more heavily in stocks with extreme volatility. This is how he approaches the market. However, it's still too early to be sure. The next issue is the tariff that the Trump administration will implement on April 2nd. Mike Wilson can provide clarity on the tariff rates and the target countries and products during this period, but there is a high possibility that it will be the starting point for tariff negotiations. It's a terribly sad story. What is that story? We know that the mutual tariff will be implemented on April 2nd. But this is not the end. From this point on, there is a high possibility that tariff negotiations will start anew, so the tariff issue is just beginning. It can be interpreted in this way. That's why for now, a steady putt is more helpful than a trump putt. This is the thought being expressed. The putt we're talking about here is this kind of support. It's about giving support. The idea is that if the stock price falls below a certain threshold, the Fed or the Treasury will intervene and take measures. This is what we call a put. You can think of it this way. What Mike Wilson is talking about now is that it's a bit hard to expect Trump's put. There is a high likelihood of issues persisting as the trade war continues. However, on the other hand, we have annual puts left annually. If we see the situation gradually improving, it will undoubtedly support us. That's what we're talking about right now. Wise and the team are currently managing consumer-related stocks due to the rapid repayment of household debt and concerns about taxes. So, it would be good to avoid stocks like consumer goods. That's what we're talking about. On the other hand, global companies can profit from the weak dollar. Companies that are playing in the international markets of various countries will inevitably see the price of goods and services fall if the dollar weakens. So they're in a position where they can profit. That's what they're saying. And as you can see in the chart below, this can lead to a more widespread negative impact in the long run. If you look at the picture here, there are two graphs. One is yellow and the other is gold. First, if you look at the yellow, it's comparing the relative performance of the S&P 500 and European stocks. That is, European stocks and United States stocks. If it goes up from zero, it means that United States stocks are doing better. And if it falls below zero, it means that European stocks are doing better. That's how you see it. And another thing, what is this gold color here? It's the euro. And it's comparing whether the euro is more expensive or the dollar is more expensive. And if it goes up, it means the euro is more expensive. And if it falls down, it means the dollar is more expensive. That's how you see it. So, in a state where the euro is more expensive, that is, when the value of the dollar falls, we can confirm that the United States stocks are doing much better than European stocks. Well, so the dollar has been very strong all along, but if the strength of the dollar starts to wane, then from that point on, United States stocks will start to diverge. This can be understood as such a market. Well, the thing that seems to help revive the bullish market of the United States stock market is the iron bar magnificent segment, one of the most prominent market segments in recent trends. One of the main reasons why the United States stock market could not avoid adjustment recently is that the Mag 7 was not good. Therefore, if the megatech companies with a large market capitalization fall, it is possible to understand that the overall market cannot avoid a downward trend. Well, the main United States stock indices are still lingering in the negative territory. It still hasn't been able to turn around into a bullish market. If you look at the overall trend of the S&P 500, the expectations for the morning are gradually decreasing. It hasn't hit the bottom yet, so that's the thing. Interesting changes have begun appearing in the score prediction trend at the screen's bottom. What that means is that the score prediction of the megapixel has finally stabilized, and it seems to be hitting the bottom in the 0% range. Well, if you look here, among the S&P 500, there are 7 magnets, the Henson 7 stocks. What is the morning prediction of this stock? It showed a downward trend for a while, but now it seems to be rebounding. What does that mean? With the earnings announcement season ahead, there is a possibility that the stock price could rise. It seems good if we conclude like this. So far, we've discussed the overall trend of the United States stock market. Next, we will move on to individual stocks. First, among the top 18 United States stocks, we will share some information about which stocks are showing the fastest recovery trend. Well, today I will show you 3 charts. First of all, that standard is the 200-day moving average. What is the 200-day moving average? It's a very important technical indicator that can interpret the long-term trend of stocks, and it's such an important trend line that there's advice for investors not to even look at stocks that are traded below the 200-day moving average if you look at it this way. The fortunate part is, excluding only 4 types, most of the non-existent types have already recovered their stock prices above the 200-day moving average. I can deliver some good news. If you look here, the last price and the 200-day moving average. Simple moving average is an abbreviation for simple moving average. When we base it on the simple moving average, the 200-day is the average and how much distressed the current stock price is. Accordingly, if it's a plus, the stock price has risen a lot more than the 200-day average, and if it's a minus, the stock price has fallen from the 200-day average. You can see it like this. The current long-term trend is the best in palladium. The situation is that the stock price has risen by as much as 71.15% more than the 200-day average. The second best trending stock is Innodata Plus, up 59.3%. In addition to that, MicroStrategy is up 38.5%, Celestica is up 31.6%, and Talon Energy is up 23.98% above the 200-day average. You can see it like this. And if you look at the bottom, there are several stocks that broke the 200-day average and surged yesterday. For example, Bitcoin is like that, and B2 has been adjusted to increase by 2.17%. And you can see Amazon's stock price surged yesterday by 1.69%, showing a trend of breaking through the 200-day moving average. On the other hand, there are currently 4 types of stocks that are not performing well, where the stock price is still below the 200-day moving average. The first one is Taiwan Semiconductor Manufacturing Company, the second one is Tesla, the third one is Alphabet, and the last one is Nvidia. These are the 4 types. They have not yet been able to break the long-term 201, so we should pay attention to whether these 4 types can break the long-term 201 and adjust upwards. You can see it this way. Well, I'll show you the second image. This time, the standard for adjustment is the 50-day line. What is the 50-day line? It's a standard that allows us to examine a stock's short and medium-term price momentum in relative terms. You can think of it like this. It's a useful tool that allows us to check which types of stocks are holding up well in the midst of this adjustment period. You can think of it like this. Well then, we've switched screens and tried to organize it again based on the 50-day moving average line. Well, it's currently the same as 200 days. Because the stock price is 8.69% higher than the 50-day moving average line, Palantir is maintaining the best trend. In addition to that, there are types like MicroStrategy, Uber, Endodata, Nextracker, and Talenergy. If you see it as the stock price is better than the current 51-cent average line, it will be. Bitcoin is down 3.06%. If it rises a bit more, it could break the 51-day moving average. Nvidia is good. Nvidia is currently about 4.07% below the 51-cent average line. If the stock price rises over 4%, it can break the 51-cent average line, which represents the long-term and medium-term trend. In addition to that, Meta is at minus 5.24, Amazon is at minus 6.87, and Taiwan Semiconductor Manufacturing Company is following at minus 7.17. You can see it this way. Several stocks, including A, B, G, and O, have fallen over 10%, significantly more than the 51st average line. Broadcom, 10.3, Vistra, 10.67, Tesla, 16.4, B2, 17.7. Lastly, Credo Technology is in a situation where the stock price has fallen almost 20% more than the 50-day line. Lastly, for this time, we will review again based on the 10-day line. The 10-day line is, we can see the current short-term stock price trend. What does that mean? It means that the current adjustment phase is almost over. Then, among the top picks in the United States, we can check which type has the fastest recovery rate. Well, most of them are in the black now. Based on the 11 line, most stock prices are above the 11 line. This shows that the trend of the United States stock market has been good over the past few days. Well, the stock with the best trend is Strategist, which has risen by 15.47% above the 10-day line, making it the stock with the best short-term trend. The second best trending stock is Tesla, and the third is Palantir. Short-term trends of stocks like B2 Celestica, Credit Technology, Vistra, Talenergy, etc. are the most noticeable. That's how you should view it. On the other hand, there are still stocks that do not show good short-term trends. It's Broadcom, as I've mentioned several times on the broadcast recently. Broadcom took a hit from Jensen Huang, and Jensen Huang said that Broadcom could never catch up with Nvidia. That's what he said. And then there's Google, which has been using Broadcom dominantly, but recently decided to use MediaTek, a Taiwanese company. When these two negative factors collide, it seems possible to conclude that Broadcom is the stock that has fallen the most recently in the short term. Is this the last content prepared for today? This is news related to Tesla. Cathie Wood said that Tesla's stock price will rise to $2,600. That's what she said. That means from now on, it can rise about 10 times more. She set a tremendously high target stock price. In the case of this article, I didn't read it directly. Shall I convey it in a slightly different way? Well, Kathy Wood talked about this in an interview with Bloomberg Television, so today it's a bit long, but it's a 13-minute interview, and it would be great if you could watch the video translated into Korean to see what Kathy Wood is talking about. That's it for today's broadcast. Thank you from the bottom of my heart to everyone who has been with us until the end of today's broadcast. I will be back tomorrow with useful information that can help your investment activities. We will all fight together until the day we retire from investing in United States stocks. Have a happy day. Thank you.
I plan to share some of the conversations I had with examinees and during the live broadcast later. However, I would like to start with what we can definitely talk about, starting with Tesla.
And so,
I'm sure you've also received many questions about stocks.
of course,
Yes, it recovered well this week, up by 50%. Elon Musk mentioned your name when he instructed his employees to own stocks. Cassie Wood asked to examine the strong market trend. Do you think there is a concern about recent stock ownership? Has the traditional view on stocks changed a bit? First,
I want to give all my shares to the 3 analysts studying Tesla at ARK. Our expectations have not changed. The United States economy is currently in a very difficult situation in the short term. There is a lot of uncertainty. This is not a good situation for any car manufacturing company. Of course, we are aware that the political and historical relationship is complicated and that our country is addressing the issue. We believe that this too shall pass soon. We own a Model Y refresh, and we are aware that the orders for the Model Y refresh are very active. I also haven't received it for a very long time. We plan to launch a new low-cost car that can be sold for under $30,000 in the United States in 2 minutes. The demand is increasing, and of course the most important thing is the robot taxi. And of course Tesla announced that it will commercially launch the robotic taxi service in Austin, Texas in June. When that time comes, analysts will have to factor in what the robot taxi service is into the model. This software, as a service-type software model, records a very high margin of over 80% in the case of platform companies, while in the case of electric vehicles, it is a total margin of 15–25%. Therefore, we think that robot taxis will occupy 90% of the company's value within 5 weeks, and officially announced that they believe the stock price will reach $2,600 within 5 years. This does not include the humanoid robots moving into the Tesla ecosystem much faster than expected. Thanks to the robot taxi, it has increased more than tenfold.
aren't you worried about the noise due to the role of Elon Musk? Talk about whether you invested in the risk premium stock or did not invest.
Yes, I think one of the reasons the stock price has halved is that the stock price has fallen by half. I think all of this is very short term. It's a crime, and this prosecution is continuing the crime. But there are many cameras attached to Tesla cars. People who commit such crimes in Xi are being chased by our country.
Would you like to add a position?
We ensure that we can check the content added to the position every day.
This is the last question. Do you see any actions that need to be taken to raise the stock price right now, or do you think the market will figure it out?
For the launch release, I'm thinking of low-cost cars, robots, taxis, these 3 things. There's one more thing, but this is a bit more of a radical opinion. I think the economy is staggering with a lot of uncertainty, and many people are worried that they might lose their place in the United States. It refers to people related to the government, namely the federal, state, or local agencies in the fields of medicine and education. It accounts for under 30% of the United States labor force. And there is artificial intelligence on another level of uncertainty. The middle management team is actually seeing what's happening. As you may know, their superiors are able to handle more and more work as time goes by. So it's another cause of uncertainty. However, I think it will ultimately be used negatively. In the long run, the evolution of technology, and technology is always associated with new opportunities that we can't even imagine.
Let's include the Chinese elements in the Tesla discussion. What the analysts in this region commonly point out is that Tesla in China has a more competitive product compared to the current competitors' products. Is that a compelling reason to buy?
Well, it depends on the context. If we look at BYD cars, we see excellence in many aspects from our perspective. If we look at indicators such as price-to-performance ratio and output, Tesla still has a lot of competitiveness. It varies depending on the type of car, but it's not the most competitive.
There is a mysterious difference.
From a cost reduction perspective, there is a subtle difference that can be seen in the cost of battery for electric products between Tesla and other competitors. So in fact, I think competition is good. What's more important in new technology is the expansion of the technology that Tesla and BYD are doing. And if the unit growth rate increases, the cost will significantly decrease. Therefore, we think of Tesla and BYD as leaders when it comes to electric cars. Even if we add robot taxis, BYD is not there yet.
I know I said that was my last question, but here's one more. Let's consider the worst-case scenario. If Tesla fails to score even a little in China, for example, would it still be crucial if Tesla loses that market?
I think China is very important to Tesla. And actually, I think Elon Musk and his mother, May Musk, are considered celebrities in the United States.
Musk is a big star in China.
Yes, and of course it should be. To answer directly, if he fails in China, there will be a short-term hit on the stock. Will it go beyond $2,600? No. We're discussing robo-taxi because car loans in Seoul are significantly more expensive than in China, considering Seoul's global economic role. For example, in Wuhan, we know that Baidu's Apollo is competing with taxi drivers at 35 cents per mile. In the United States, it's $2 to $4 per mile. So we think the robo-taxi business will have much bigger opportunities outside of China. Baidu?
You mentioned Baidu, and we are still in negotiation. Yes, that's correct.
Why?
Please explain the reason.
Recently, I had a conversation with Chief Executive Officer Robin Li and his team. We are well aware of how competitive the Chinese market is, being in the self-driving car and large-scale language model. We are observing how Robin Li is overcoming the challenges. Wuhan is the most difficult market in China. He is applying what he learned from his robot taxi experience to other market segments, and also in Hong Kong. In the case of Hong Kong, the price is much more expensive. I believe he is working very hard on the development of autonomous vehicles. I believe that within the next 6 years, autonomous vehicles will grow into a market of $8 to $10 trillion worldwide. I think if Baidu achieves the same success in markets outside of China, including other Asian countries, the value of its stock will be tremendous.
Do you like it? Would you like to add more?
I can't tell you what we'll do in the future, but you can see what we do every day.
Have you ever thought of a different name in China?
Yes, I believe the expression of sincerity has changed. The expression still in mutual translation is used, and new productivity is also being used in the old structure.
That's right. It's a question of technology and patience.
Tech, efficiency, innovation. I'm very impressed with what's happening in China. Of course, there were moments in China similar to when ChatGPT was introduced in other countries around the world before the end of 2022.
Everyone
was surprised. And one of the interesting things I learned is that it could have been made much cheaper. I can't be sure about that part. However, the algorithm is very creative. It's not made in the West, but an open source made in China. Now everyone has started using it. They say they like that idea and are collecting it. So the fact that we didn't know until we started researching this open source movement in China is that this movement started 10 years ago. Many software providers in the Western world did not supply software to China because of concerns about intellectual property theft. So China decided to try it themselves and switch to open source. I like open source, and I think it will bring a lot of competition. It's a good thing, especially for the end consumer. DigSick.
I think the discussion about artificial intelligence in the United States is becoming ineffective because of the moment. It seems like there are two questions. Do you believe that story? And secondly, the concept that the technological market dominance of the United States and China cannot coexist at the same time. What do you think?
I don't fully agree. I think technology is flourishing in both countries, not just in the United States. The competition will intensify. It will improve through competition. It will also improve in terms of breaking down the artificial intelligence model for Western companies. In China, they are researching a model that ties software to the hardware, lowers the price of the hardware, and makes everything low quality. Will some models be influenced? That could be possible. However, if you compare the open source model with the dispersion model in terms of performance, even if you use R1, the dispersion model is better. What if there is an interesting point of open source on our website? If the performance of non-open source is steadily improving and a few recent breakthroughs have been made, when looking at the ability to measure the performance of open source, you can know that the hope for performance improvement is actually more intense. So I'm very curious whether open source can quickly catch up with the performance area where the current proprietary source is leading. The decision has not been made yet. However, I believe that this will be a great opportunity for both countries.
I will ask one last question. I will just ask one question to Mark. What are your expectations for the S&P 500? I see volatility continuing in the future T quarter.
And as I mentioned earlier, it's unclear whether consumers will be able to maintain their jobs, which leads to volatility. As a result, the economy weakens and inflation was more global at this point than many people predicted. Most investors believe they will have more flexibility than they think during the next 2 quarters, and they consider this a solution. The market is thought to be discounted due to uncertainty. However, no guarantees can be made. However, much of the uncertainty has been resolved, and the next phase recognizes that this administration has far more flexibility in terms of regulation, taxation, and leverage than previously understood.
Well, the crux of the argument is not about regulation or taxation. The focal point of the consumer is the tax aspect. If we decide to remove this, do you think we should adopt a practical approach? We are
thinking that would be the case. Self-driving cars, referred to as the world's largest artificial intelligence project, marks the end of our perception of artificial intelligence. The most profound application of my artificial intelligence is in medicine.